Welcome, ladies and gentlemen, to Commodity TV, in a new edition of our online interview series. We want to talk now to Sean Roosen, the CEO of Osisko Development. Yeah, I would say now a famous gold developer with starting production hopefully this year already. And we want to get an insight into the company and what's going on with the fabulous Cariboo Gold Project in Canada. Sean, good morning. How are you?
Jochen, I'm one of the happiest guys in the mining business right now. I've got three things that a guy like me likes to have. We got money in the bank, over $100 million in the bank. We've got a big gold deposit with 2 million ounces of reserves and another 3.3 million ounces of resources. And most importantly, we have a permit.
Yeah.
So we're one of the few permitted mines out here in the gold space. And we should be Canada's next gold mine under construction here. We're about 1,200 meters into the construction on the underground development. So big tunnel in. We're taking a bulk sample as we speak. And we're in the ore body now, so we actually be able to take everybody down and have a look at it. We've got many site visits planned for the spring. And for me, this is what I live for. This is we've gone through the 5 years of permitting. We've been on this project since 2015, and now we're in construction and development, and everything is moving forward. All our agreements are in place. We've got both our environmental permits and our large mine operating permits for 5,000 ton a day operation, which should generate a 200,000 ounce a year starting production. But we are trying to look at the much bigger picture. This is a very scalable project. And as you and I were talking before we went on today, one of the key aspects of this project is we've got about 4.4 to 4.6 kilometers of strike length in the known drilled zone with over 700,000 meters of drilling in that one area alone that was all drilled by us. So, everybody talks about, the old days or whatever. This is all new drilling in the last 6 or 7 years that we've done. And we're able to tie that in. We're seeing from the underground, it ties in extremely well with what we perceived from the surface drilling with what we're seeing in the actual underground development. So a couple of key numbers that I did want to get out today. We've got 2 million ounces of reserves, 3.3 million ounces of resource in the current envelope on that 4.6 kilometers. There's another 10 kilometers of strike that we haven't drilled on, including the proserpine, that we see exactly the same mineralization along. There's 481 of these vein corridors that were quantified in this resource, and we've got over 8,000 pierce points into it. This is a well-known deposit now. The grade is about 3.78 grams overall. Sounds low for an underground mine, but when you compare it to things like Young-Davidson and Alamos in Ontario at 2.2 grams, Goldex by Agnico in Val-d'Or at 1.75 grams, so we're twice the grade of Goldex. We're 50% higher than Young-Davidson, and we're the same grade as LaRonde, which is another one of the big Agnico mines that's operating at over 3,000 meters in depth. The big difference with this deposit is we have almost 4 to 5 times the strike length of any of those deposits in the known horizon. And we're only down 350 meters, which for an underground mine is like the first step. So this is a big project, and we're at phase 1 of it. And we think this thing's going to scale really big.
Okay, fantastic. And I think also AIC are still calculated below $1,000. I saw also you are doing an optimized feasibility study. What is the purpose of that? Why to optimize it?
Oh, we did our feasibility in 2023. Since then, we've done more metallurgical research, and we see some changes, very favorable changes in the metallurgical process. We see a significant amount of recovery in the gravity circuit, which is the cheapest and most efficient way to recover gold. So just like native gold and sulfides coming out in a gravity form. We're also seeing an increased value in the concentrates that we can produce from the flotation. Our original study had 28 grams per ton in a sulfide concentrate coming out from the flotation. We think that's going to be much higher, and it's going to reduce the amount of trucking required, and also allows us to sell a premium concentrate to off-takers, sort of like Glencore's and Sumitomo's of the world that are looking for sulfide gold concentrates as they want to dilute some of their other concentrates from other sources. So this also brings down the cost of capital because that is a source of project financing with the concentrate offtake. So all these things are important to the story. The other thing that we were able to do is we achieved our power contract with BC. So we're getting electric hydro power generation from Site C in BC, which is at 6.6 Canadian a kilowatt hour. And as we've seen, the Canadian dollar is quite low right now at about $1.50 US. So that translates into under 5 cents a US a kilowatt hour. And it's green power. So we're highly electrified mine. We should be somewhere around 75 to 85% of all of our operations should be electrified.
Wow.
And we're underground in bulk tonnage, so we have a very low surface footprint. So this is a very friendly ESG mine. Very, very small footprint for the size of what we're doing. A significant amount of upside at depth. We've drilled down to 1,000 meters. We see the exact same mineralization that we see in the 350 meter window. But we know it goes down to at least 1,000 meters, and we think it could go significantly deeper than that. So, if we look at the ounces per vertical meter in this, it's significantly higher than almost all the other underground deposits that we're comparing it to, at 15 to 22,000 ounces per vertical meter. So,
wow. That's really a lot. Yeah, because I see it in your presentation also that I would say you just scratched the surface with that. I mean, we talk about underground, but it's really shallow, right? And it looks to me like that you have easily potential maybe to 1,500, maybe 2,000 meters depth, right?
That is correct. So, at those kind of levels, every 100 meters is adding about 1.5 to 2.2 million ounces of resource. What the reserve conversion from that will be, with the expectation we somewhere between 50 and 70% would convert to reserves from what we know right now, but that's highly speculative until we actually do it. But that's what we've experienced so far.
Okay, super. So that means you are really fully on track to really start production for phase 1 this year. When do you think that could happen? Like Q3, Q4?
Well, we've got about 24 months of construction. So we'll be in construction up until the end of 2026 at this point in time. And we'll start real production, commercial production should be in 2027. That's what we're targeting right now.
Yeah, okay. No, because I saw in your presentation that you are planning, I'm just looking at that, that you are still planning here like the 26,000 ounces this year, or have I missed there something?
That was in the 2023 feasibility study. The goal right now is to try and push, rather than go in 2 steps, to go 1 step rate to 5,000 tons a day. So we'll delay the start of the production instead of stepping it. To go to a bigger production of 5,000 tons a day right off the bat. So we need about 22 to 24 months of construction to get there.
Okay.
And then that'll allow us to come online at roughly 200,000 ounces a year as we step in. So, for every 5,000 tons a day of production on this project, you generate 200,000 ounces a year is the rough metric that's worth thinking about when you compare this project to other things that are out there. If you look at the Agnico portfolio or the Alamos portfolio, you've got Young-Davidson, Goldex, and LaRonde that are pretty comparable. You see it in our slide presentation there.
Okay. And how does it look with the project finance then to really complete the whole construction and to really go in full commercial production?
To use the American analysis, I'd say we're somewhere between second and third base. So we've been working on the project finance for about 1.5 years. We had completed the first feasibility study in 2023, which is the basis for those financial negotiations. The underground work that we're doing right now with the getting into the ore body, validating with the bulk sample, and comparing underground resource identification from with the work that we did from surface is underway, and then the updated feasibility numbers will include final CapEx for the milling equipment and for the underground development. We've also done some mine plan optimization. We're trying to go to a larger stope size, which will reduce overall costs and simplify the mining method significantly. So a lot of upgrades. There's been a lot of good work that's come out of this. And again, as I discussed earlier, the metallurgical advantage of seeing increased recoveries in both the gravity and the flotation circuits to produce a better concentrate. So those metallurgical studies are complete. We're just waiting for QPs and everybody to finalize. And hopefully we can announce that updated feasibility numbers here in Q1 or early Q2.
Super. And do you think you still can hold the AIC below the $1,000 per ounce? Because I mean, that would, at those gold prices, that's a cash machine.
Well, I think currently with the Trump administration in place, the Canadian dollar's been beat up pretty hard. So when we started this, we were probably about $1.25 Canadian per US dollar. We're now $1.50. So I think everybody in Europe understands the currency issue. So we're seeing a significant discount on our input costs that are Canadian-based costs, such as power and labor. So we're still in that ASIC number, we think, as we come out of the updated feasibility. When we did our last feasibility, gold price was $1,750. Consensus gold price right now is somewhere between 21 and 2,300. So we've seen an increase in gold price for the inputs here going up significantly. On the mining costs, the increase in the size of the stopes is bringing down our overall inputs for mining costs in terms of the amount of development and drilling that we have to do, and the size and the scaling of the equipment that we can use to mine with. So by any time when it comes to underground mining, anytime you can increase the amount of tons that you're mining per day, your fixed cost, G&A and water treatment and all those things come down significantly.
Okay, super.
On a unit basis.
Sorry. Yeah, sorry?
On a unit basis, sorry.
Okay. How important is that ore sorter treatment? I saw that in your presentation, and there was a statement like plus 43% of mined material removed as waste. I think that is, a real big number, right?
Yeah, so the ore sorter is it's a Tomara system that we're using. Some of the material that we're mined out of this bulk sample is on its way to Saskatoon, where Tomara has set up a research center. We'll be doing one of the biggest ore sorter tests that's ever been done on about 1,000 tons of material. But from what we've seen so far in the ore characterization and the ore sorter test work that we've done, we can reject somewhere around 40% of the material without having to grind it up and expose it to any process chemical. And that can be disposed of as a waste dump, like a gravel, as opposed to having to deal with it as a tailing. So a lot of the flotation tails will go back underground as backfill, and we'll have basically a gravel waste dump from this 40% plus that we think the ore sorter is going to reject. The big advantage of that, though, is that it's less than $2 a ton to process with the ore sorter, as opposed to $20 to $30 a ton at the mill. So that's, by not putting it into the milling circuit, you're saving significant amount of cost and of energy of grinding and then disposal costs.
Okay.
That's a very important piece of it, and certainly one of the reasons that our ASIC is very low.
Yeah, this is how I understood it, really. Fantastic. When do you think you have the project finance finalized?
We'll be, first half of this year, we'll have the most of it done. I don't know if we'll get it announced in that period, but we're certainly pushing hard. And the piece that we need the most for this is the updated feasibility numbers. And that'll be kind of drive the cost of capital aspect of this project. But we're on infrastructure. We have a significant amount of equipment in hand already. We bought a milling circuit 5 years ago that's in storage, all brand new Metso equipment and FL Smith equipment, which is the Cadillac of milling equipment. It's all sitting in storage in Prince George. It's the crushers, the grinding mills, and the basic component, the main components of that circuit are already purchased and paid for. We have a brownfield site where we're redeveloping on an old mill site. So we have infrastructure, power, and water, and the things are there. Not enough for what we want to do, so we're pulling a new power line in. But we also have, over 150 rooms and camps. We have infrastructure in place in terms of setup that we've operated here with up to 300 people on site. And we're on a paved road on the way into Wells. And we're in the town of Wells, which is a town of about 100 houses. And so we have there, and we have significant amount of historic workings around the site. So it's a very disturbed site. This mining started here in 1858. So, it's been on the go for a minute.
Absolutely.
And the good news is most of the guys that have worked in this camp over the last 150 years have all made money.
That's important. So then we hope we make also money with that. Super.
Yeah, well, this is a classic Osisko story. We've gone back into a historic mining camp that was successful in the past, brought new thinking to it, industrialized the process, and upgraded to significant throughput with bulk tonnage mining and new processes, just like we did at Canadian Malartic, where we built, the 9th largest gold mine in the world and Canada's largest gold mine, Canadian Malartic. We went there. That was a camp that had produced 8 million ounces historically. It's now that deposit is now over 33 million ounces, and it's the flagship asset at Agnico. And they're underground at 25,000 tons a day. We built it at 55,000 tons a day, which was unheard of back in the time when we did it in 2011. So we're very much repeating history here. We saw what Brzezinski was able to do with Windfall Lake. We had quite great success with the royalty company that we launched $500 million market cap in 2014. Now close to a $5 billion, $4.5 billion market cap, and then the Osisko Development is our latest foray into the development side, where we go back and we repeat what we do best. Go to a brownfield camp, drill a lot. As you know, the internal program of Osisko is called SUDS, which has nothing to do with beer. It stands for Shut Up and Drill, Stupid.
Okay, super. Perfect. So
we finished the drill part so far. We're going to do a lot more, though.
Yeah, absolutely. No, great. So Cariboo, I would say, is fully on track, really moving forward from here, like 2-3 years. You are really then in full production, which is fantastic. What's going on the Tintic project? Because it looked to me a little bit like last year. Yeah, there was a little bit of a disappointment on the mineral resource estimate. So what's going on in Trixie? How do you see that?
Well, Trixie has come a long ways, and we finished the underground development. We're actually in the ore body now. Again, it's a happy day there. We've also received the permit for the underground mining, as well as the permit for a leach pad there. The leach pad is constructed, and we're looking at starting that operation up this year as well. We've got a couple of partnership opportunities to put that smaller resource into production, just as a heap leach and maybe as a custom milling opportunity. The other aspect of that is we've been working on the porphyry copper model, which is the original reason that we were there. We think that this thing has the potential to have a Bingham-style copper gold porphyry underneath it. The reason we were there in the first place is this is one of the biggest targets left in North America. Bingham is almost a mile deep, has produced over 25 million ounces of gold and 35 million tons of copper, I believe. And it's located 40 miles north of us. And Dick Silito, world-famous porphyry geologist, and the guy that really wrote the white paper and the sort of story on copper-gold porphyry systems, which produced the bulk of the world's copper. He had this as his top pick in 2010, and we've been working to do that ever since. We got drilling. We got a small drill budget for that, about $5 million this year. We're working on that, and then the underground development there. Some new developments at Trixie. There is a manganese tailings pond there that we're just doing some work on to see if that can be a source of manganese, because right now there's no domestic source in the U.S., so it's on the critical minerals list in the U.S., and we're experiencing quite a bit of encouragement from the government to get that underway. We also have several CRD deposits that, like the Bergen that we're exploring for silver, lead, zinc. Obviously, silver has taken a great run, just like gold has. So we got four ways to win in Utah right now, and we're actively underground and we're actively drilling from surface, and we'll bring you more news on that. But it's a very interesting place, and we'll see whether this manganese story gets any legs underneath it or not. It's already mined. It's in the tailings. It was a byproduct from the CRD deposits when they were mined. So lots to come on Trixie and on the porphyry system.
For the production at Trixie with the start, what do you think would be a production per annum then?
It's going to be a small thing to start with. The resource is about 250,000 ounces overall, of which about 150,000 ounces is in the current mine plan. So it'll be kind of a 30 to 50,000 ounce a year startup. However, there is a lot of exploration around that area now that we have access to the underground. We're rehabilitating we're on the 625 foot level. We're going down to the 750 level. There's 5 kilometers with 5 gold mines on it there, but the underground mineralized trends that were mined during the Kennecott years is 27 kilometers, and they stopped at a depth of 300 meters or 1,300 feet. So none of these mines, there's 5 mines there, have been explored below that level. So we want to drill some holes and see where that goes. But the highest grade mine that was there was the North Lily mine at 45 grams a ton. This was a high grade system. It was mostly mined back in the day to provide flux to the Bingham smelter by Kennecott. So they only mined the areas that had good quartz veins in them. The areas that were a little bit more base metal or polymetallic, they left alone, like this T2, T4, where we're mining right now. So there's quite a bit of work to be done here. We're at the beginning of this story, and we should see some significant developments there this year.
Okay, super. So that means you have some positive surprises for us, hopefully.
Yeah, we have Mr. Friedland on our southwest border with Ivanhoe Electric, and we also, so there's a lot of big science going on in the area. He's been in there with Typhoon, and there's a lot of work going on in the Utah camp, and Utah has been voted by the Fraser Institute as the #1 jurisdiction in the world to carry out mining investment. Mm-hmm. So I think it's very important for shareholders too that during the Trump administration we have a U.S. asset in the top jurisdiction in the world, in the top jurisdiction in the U.S. And one of the biggest mineral endowments in the U.S. So, I think we're strategically there. We spent a lot of money to get this project under our control, almost $200 million Canadian in acquisition costs. We spent another $100 million to get where it is now. But it is a big company style project, and we're approaching it as such. Our MO is to do no small thing. We try and focus on the big ones, and this has got the potential to do what we want to do, which is another Osisko style asset.
Okay, super. So that means you have like 2 top assets here going into production. The question of the questions is now, that's what we get also from our viewers. What's going on in Mexico with San Antonio? Do you still want to sell it, or has, let's say, the attitude or the mode a little bit turned since Mrs. Scheinbaum is in power?
We're very interested to see what she does, especially with the Trump administration motivating Mexico the same way it's been motivating Canada to have a look at some of their policies. We think that the moratorium that was placed on open pit mining is up for review. Whether it changes or not, I do not know. But it certainly seems like Mexico needs to get back to business, and that open pit mining in Mexico has been a big staple, and I really can't see how it doesn't come back. However, we have looked at partnerships to simplify our portfolio, and we continue to do that as a monetization exercise. However, if we have a 15,000 ton a day plant that we purchased and is on site, and we leached 1.1 million tons there, and it's a very significant deposit. It has about 300 to 500,000 ounces of potential oxides there, and a significant sulfide deposit underneath it that we think could be a sizable sulfide deposit. We haven't drilled enough to quantify it, but our resource there is 1.1 million ounces and very, very much on surface. But we've got mineralized trend over 20 kilometers there. So we were in the process of soliciting a 20,000 ton a day open pit permit when the moratorium came in, and we had the equipment on site. We figured we had about a 10-month mine build before the brakes went on. So that project is sitting there ready to go. If there is a change in permitting status, that would be sort of a 50 to 100,000 ounce a year oxide mine with significant sulfide mine underneath it.
So
that's still in the asset portfolio.
Yeah, exactly. That, because I see that now valued at zero today. But if that happens, that would be a big addition, right?
That would be a huge addition, because it's a very favorable mining area. We're about an hour and a half drive out of Hermosillo. We're in Sonora State, and we've got Agnico around us, and we've got other miners there. So it's a very good starter asset for Mexico, and one that we thought was going to be the first mine that went into production under the ODV portfolio. We had acquired three strategies within ODV, running in 3 different parallel tracks. We thought that Mexico would be first, but it turns out that we were able to permit in BC in 4.8 years. Everybody told us it was going to be 10 years. So a shout out to the BC government for getting us our mine permits in BC in under 5 years. Hopefully we'll see the same thing in Mexico. And in Utah, we achieved permitting last fourth quarter last year. So we've got 2 out of 3 permits in hand. And we continue to move into that that list of rare things, which is feasibility plus permit plus money.
Yeah. Yeah, the money is also something really important, and you have, thank God, enough. And I think with that money you have, you really can move forward, if needed, all three projects, right? Because for Cariboo, when you have the project finance, then you are done there, right?
Yeah, we would do that. I mean, we're going to be very prudent with our treasury until we cross over. Obviously, Cariboo is the front and center because we're locked and loaded, and it's the bigger of all the three projects right now, with over 2 million ounces of reserves and the 1.47 million ounces measured and indicated, another 1.7 of inferred there. So that we got the most drilling into it, and we've spent, we're about $700 million spent on that project. So it's seen significant investment.
Absolutely. No, and I mean, when you have that up and running and moving, then you can easily develop the rest out of the cash flow. Not a problem.
Totally. So that was the idea, was, with three assets at various stages of development. Right now it's Canadian, it's the Canadian assets that are leading the charge. But the capital available in the U.S. right now for U.S.-based projects has gone up significantly in the last 7 days. So we're going to see what happens there. We've had more inbounds about our Utah asset in the last 4 or 5 days than we have in the last 4 or 5 months.
Absolutely. No, fantastic. So I think thanks for the great update. It was really fantastic. And I think now we are waiting really on the optimized feasibility study and your project finance. And then I would say ready to rumble.
Awesome. Thank you very much, and all the best with the investments for the listeners. And do give us a call. And if you find yourself in BC, more than happy to take you out in the Canadian version of Switzerland. We're at about 4,000 feet. We're in the mountains. We got glaciers up on top.
Yeah, fantastic. Super. Okay, Sean, thank you very much. Wish you all the best. Thank you.
Thank you.
Yeah, ladies and gentlemen, that was Sean Roosen, the CEO of Osisko Development, and you heard it. Cariboo is on high speed, I would call it, and project finance is moving. The updated feasibility is coming. And this mine is then about to go into construction. 2 years it will take approximately, and 2027, 2028 latest, there will be then the commercial production, which is fantastic. And I mean, we still saw AISC, well below the $1,000, even if that would go to 1,100 or 1,200. Sorry, with those gold prices, this is an absolutely cash-spitting machine here. And they will make a lot of money. And to be honest, if I look at the chart of Osisko Development, this is one of the top bottom formations I have seen for years. And it's really time to get into the stock. Really make sure you have a look on Osisko Development. That looks fantastic. Super team behind. Sean has a tremendous track record. His production history, mine history is he's a legend, I would call it. And those are the people we want to work with. And he has the money, he has the mines, he has the permits. This is what he said. And that's exactly what is key when you are developing 1, 2, 3 projects into production. And also I have a pretty good feeling about Mexico, to be honest, because they need to do something. And I think the Mexican project could be the wonderful bonus because it's valued at zero. So make sure you have a look on Osisko Development. I'm a shareholder in the company. You should be too. Thanks for watching us, and bye-bye from Switzerland.